So let me recap sort of what's going on. So we have way less sales happening now out of the dealers versus 2019, which means that in a typical scenario where a buyer goes to the dealership, they will trade in a car to buy that car. And so because they're not selling nearly as many, you're not, from your standpoint, based on the work you do, you're not seeing nearly as many trade-ins coming in, which is what you use. So that's a signal that says there's very low movement in the dealership network, at least selling cars. And then at the same time, when you're touring these dealerships, you're also seeing a glut of inventory piling up, and especially around pickup trucks, right? Can you talk about that a little bit?
Yeah, so trucks are a big problem, especially for Ford. Ford, I know there's big stories around Ram, and I've already been to some Ram dealerships, and they're already cutting prices on trucks. But I think Ford's got a bigger problem than Ram does, honestly, because F-150. I mean, they're still selling trucks. Don't get me wrong; it's not that they can't sell them; it's just the price points are too high, and the amount of trucks that they're pumping into the system, the amount of sales is just not keeping up with it. So I get a lot of flack. I get a lot of comments saying, "Well, you're talking about Ford like they're not able to sell or whatever," but they're putting over better numbers like quarter over quarter, right? But you have to think about inventory that's coming into the system. So if you look at a dealership that maybe a year and a half ago, they would have 20 trucks sitting on their lot. And they would sell 20 out of 20 a year and a half ago, right? But now you have 100 trucks sitting on that lot, but they're selling 24 trucks in that month. So yeah, they increased their sales by 20%, but they should be increasing their sales by 300%. And they should be hitting the cover off the ball right now because they actually have available inventory sitting on their lots and they're not doing it.
And that's fascinating, right? Because that ties directly to GM and Ford. And this is sort of us. If you're watching this and listening to this, this is Brandon and I trying to put the puzzle pieces together. We're not in any way saying this is absolutely definitive, right? This is just what we think is going on.
This is
That's
just what we're
correct.
seeing. This is what it
Yeah.
looks like when I'm going to these dealerships. I mean,
Yeah.
there's trucks everywhere.
And so what's interesting there is trucks are the highest margin, highest revenue items for companies like Ford, GM, which is part of the reason why, if you look at their last couple quarter results, one of the reasons why they've been able to post such great results is because it's not the customer that buys the car, it's the dealer that buys the car. And so when Ford and GM record, as an example, record a sale, it's a sale to a dealer whose lots were empty and now they're super full. And so they would get to recognize those sales. But since you're not seeing any sort of movement from the dealer to the consumer because you're not getting those trade-ins you usually would, then that signifies that there's a slowdown in the dealership, which also explains why they're so full with trucks. you know,
Yeah.
so it's kind of
Yeah.
like everything's kind of rhyming. It's all rhyming together.
Right. So
Seems like.
as they're pushing these vehicles to these dealerships, if they're not going to catch up with sales, then they're just going to keep stacking it. And they're not to the point now where they're actually turning down allocations. They can't be far from it though.
If you were to guess, just based on what you see in your area, how far away are we from something like that happening where dealers will go to and it kind of walk us through the process of what that's like. So as a dealer, what do you say? Are you like, hey, like, did you sign a contract to buy X amount of cars and now you're going to say no? How does that process work?
So I'm on the used car side. So I don't actually know all the back end that's going to go through a new dealership, but I have learned quite a bit just talking to Ray and Zach, because Ray, he worked for new car dealerships and
Yep.
he's talked to me about allocations and how they work.
And these are the guys from Car Edge, correct?
Yeah,
Ray and
yeah,
Zach?
yeah, right.
Yep.
So they actually have a rep that comes to them from the auto manufacturers or whatever, and they want to send them a certain amount of vehicles, and they have to get the good with the bad. So if we say back when like the Ford Lightnings were a hot topic and like they were actually able to sell them before everyone figured out how trash they are, like they had to take like Ford Escapes that may not have been selling great at that time to be able to get one or two of these Ford Lightnings. So when you're going into a lot of these allocations that a lot of these dealerships are getting, they're now having to take some less desirable vehicles. And now it's funny how it flipped because what's able to sell now are the cheaper things like the Mavericks, and they're selling some Rangers. But now if they're going to be taking those, they have to take the Ford Lightnings that they can't sell also. So it's interesting how it's going to kind of flip now. But I would say towards the end of this year, if we don't get strikes from the the unions, then I feel like those allocations are going to need to kind of be kicked down the road because these dealerships are not going to have space for them. They're not going to be able to move them, and these big dealerships, they are also sitting on credit when they're getting this inventory. They don't just own it outright. So as these vehicles sit for a long time, they're actually paying some interest on it too. Now it's not as much as like a used car dealer would. They get premium interest rates whenever they're flooring these new vehicles, but it still costs money for them to sit there.
And those interest rates would be reflective of the higher rates that we've been getting this year. Is that a correct statement? So like around the 5%
It
area?
will be more. I don't know the percentages of what it's going to be different because they're going to negotiate that with wherever they're getting their inventory to. They'll get a premium rate compared to the market of whatever they're doing, but it would absolutely move up as like the 10-year note moves up, as the reserve rates move up.
That's interesting. And there's another piece that's going on too that's fascinating that kind of ties this all together. If you can pull up the first article link I put in the private chat, producer wife, wholesale used car prices dropped again, what that means for bargain shoppers. So can you help us understand why so we're getting a situation where the GM and Ford and the other OEMs are posting great results because they're filling up the dealerships with inventory, but we're not seeing nearly as much movement from the dealership to the consumer because you're not seeing enough trade-ins. And now we're seeing prices coming down steadily since the beginning of the year. Can you help us understand if this is tied directly to the maybe the glut of inventory, or in the used car side? Is there, because the way I'm thinking about it is in the used car market, you're not going to have nearly as many cars because of what you described, but it seems like prices have been coming down. Does that just mean people are just not buying nearly as many cars as they used to, period?
Yeah, so there's absolutely not a glut of inventory. We're still way behind on inventory levels. What
Okay.
is
On the used car
pushing
side.
prices down is, yeah, because
Yeah.
you were talking about wholesale prices
Yes,
on
sir.
that article. So what's pushing prices down right now is the lack of demand, because a lot of these used car dealers, they've actually been able to buy. And you talk about glut in the system. There's not enough cars moving through the system to fill up these auctions, but a lot of these used car dealers that are keeping their prices stubbornly high, their lots are actually getting filled up. And you can probably, I mean, you're in Texas, you can probably drive down the street, go to the closest highway, wherever your used car dealer lane is or whatever. And you remember seeing a year and a half ago, all these used car dealers had no inventory, and now you can drive there and they're all full. So you're going to be able to see that all the way across the country. But the problem is you pulled up that article and it said wholesale prices are going down, but you're really not seeing it on the retail side yet. Because prices have gone down, I think 8-10%, somewhere around there in the last couple months on the wholesale side. But dealers still remember back February, March, when they're able to get X amount of dollars for these cars and they were paying this amount, but now they're paying this amount, but they still remember that time over there. They're like, oh, I can get that much for that car. So they're keeping their prices right here and trying to hit home runs on everything. But as the weeks go on, as the months go on, they're going to learn that they have to start lowering their prices, and it's going to happen slowly. It's not as slow as the housing market, but if you think something similar to the housing market, where you have a seller post their house for whatever amount, 550,000. Nobody bites on it. They get no views, whatever. And then they say, okay, well, let's drop it 525. But at that point, maybe the market has already dropped another 3 to 5%. And they're still a month behind. So they get no views, nothing at 525, and then say, okay, well, we have to drop it down to 500. And at that point, if the market's continuously going down, then they're behind it again. Used car dealers are doing the same thing right now. As the market is moving down, they're going to stay behind the market. So it's really going to be a point where they're going to have to be pinched before they actually start doing some of these fire sales. And when it comes up to 60, 90 days to a lot of these used car dealers are on floor plans, which is basically just their credit lines that they use, when they're actually going to have to start paying interest on a lot of this stale inventory, which is coming up pretty soon, then that's when you're going to start seeing it happen in the retail side. And I feel like we're already starting to see that a little bit now, but you're not going to see that panic mode yet for another probably 2 months or so.
And so the signal for the panic mode would be a bunch of used car dealers dramatically lowering their price. Would that be a good way of finding that out?
Yeah, and if we see that, then that's going to correspond with them keeping inventory. Now, not all the dealers are going to have to do that. Not all dealers use credit to buy their vehicles, but most do. If I had to put a percentage on it, I would guess probably 60, 65%. And that might be low. That have to actually use credit to buy their inventory. But what happens, especially on the smaller used car side, is that once they get up to 60 days on sell inventory, once they get up to 90 days on sell inventory, there are a lot of these floor plan lines that you're actually required to pay like 50% of what you owe on the car. And these dealers, they didn't have this money to begin with. So what do they have to do? They have to either fire sale, they have to lower the prices, or what we're seeing starting to happen now is they start sending some of their cars to auction. We're starting to see a lot more independent dealers send cars to auction. And that's what I think is happening right now is a lot of them have to make some quick money because they have these payments that are due, and dealers are not good with money. So they are going to take losses when they dump these cars at auction and then use that to keep their credit lines, because if they don't pay their credit lines, if they won't keep them current, then they don't have any available credit to actually buy cars. If they can't buy cars, they're not going to have any inventory. There's no point in them even staying in business. So their credit lines are the most important thing to their business. Most of the time you see a business, I know you own a business, cash flow is the most important thing, but this is their alternative for cash flow. It's their availability to actually be able to buy these cars.
That's super interesting. So when you go to these auctions, what's the general vibe from everybody there? I'm assuming you talk to all the other folks that are out there. What's the vibe? Like, what are people saying? What are people thinking?
They're sad, man. No, yeah. So it's weird because I mean, you've got, how do I put this nicely? The dealer community is typically an older age group, so they've seen that, like most of them they saw 2008, but there are a lot of these dealers that have been recently created in the last 3 years because there was just money everywhere and you could buy anything. And I mean, they put everything on credit. It didn't matter because they'd be able to sell it. I'm talking to a lot of those guys that have got into the market in the last 3 years, and they're like, well, we're not selling anything. I'm up on my floor plan. This is the first time I've ever had to pay a fee on my flooring line because I've always been able to move the cars fast enough. So we're starting to see that, and it's not going to be long before a lot of what's the Warren Buffett quote where when the tide goes out, we're going to be able to see who's swimming naked. Yeah,
That's right.
Yeah, so I think it's coming.
So from your perspective, just generally speaking, it seems like if I sort of kind of try to interpret what you're saying, is the pain that came from the higher interest rates and the slowing demand from the vehicle segment. It looks like, you tell me if I'm saying this correctly, it doesn't look like we've seen the worst of it yet. Is that an accurate way of saying it?
Yeah, I don't think we're anywhere close because we still, like, we just went out of tax time. It's just been a few months ago, and that's the best selling time of the year for car dealers. So they were still able to hold on because times were getting bad. Like we saw a downtrend in wholesale data last winter. So it was starting to get bad then. And then we have the saving grace for dealers that came in the form of tax refund checks. And so they were able to sell a bunch of stale inventory, and then they all rushed to the auction. Prices jumped up again. You can see it on the Cox wholesale data. You can see exactly when tax time happens, and it happens every year just the same way. This is no different. And then now we're starting to see this inventory that they bought right after they sold everything because prices were at their absolute highest at that point. Now, if they still have any of that inventory, they can't sell it right now. So they're either paying interest or they're having to dump it. And like, I've even got a buddy that like, he hit tax time and then he got inventory again, and now he's out of business. So I haven't. Yeah, and I mean, he might have had a foot out anyway. He was one of those swimming naked kind of people, but I see a lot of closures coming the way for dealers. And I'm even like, what I pay attention to dealer lots when I'm driving on the road now, and I'm starting to see a lot of turnover at a lot of these car dealerships. So I think we're getting close to it.
Turnover meaning what in this case?
Like they're vacating lots, and then another dealer's coming in there. So that
Gotcha.
and I've already heard of quite a few dealers that have gone under.
Gotcha. Wow.
But
Well,
not going
yeah,
under,
we
got out of the business. There we go. Not going under.
and then
There
yeah,
we go.
and then got
Yeah,
it somebody else in there. Okay.
right.
How common is that? Before COVID, how common was that turnover thing?
No, it wasn't common. We're seeing more of it now.
Okay, got it. Yeah, it's fascinating to hear you sort of tell this what you're seeing because it really does seem like we've been in a situation for the last few years where we're selling less cars than really in a really long time. Now we have dealerships that are filled with inventory. We have a used car market that's not moving, doesn't have as much demand as we were expecting. You have less inventory coming into the used car market because of less trade-ins at the dealership level, and now we have a union, the UAW, that's probably going to strike this September unless they come to some miraculous deal with the automakers, which is going to continue to throttle inventory again in the United States from a car perspective, and we're seeing prices coming down. So it's like the weird thing from my standpoint is like we have less inventory. It seems like we're going to have less inventory available if the strike happens, both in the new car market and the used car market versus historical levels, because car makers are not making as much stuff, and the prices are starting to come down. But I guess they're coming down from like a very big peak that was almost like unrealistic to keep higher.
Right.
Do you have anything extra to throw in there?
I mean, I would want to talk about the unions just a little bit too,
Yeah, of
because
course.
I really think I don't think there's going to be an agreement. I really think that Ford and GM and Stellantis they're going to want to be able to cut some production and do it in a way that they can blame something other than demand on it, because shareholders don't want to hear that. Okay, people don't want to buy our $90,000 trucks anymore. So I really think that the strike's probably going to happen, and the unions are going to go into these negotiations, and for GM, Stellantis, they're going to be like, "Look, times are tough. We're seeing lack of demand. We're seeing that that our costs. We can't pay you more money because we're trying to cut costs right now." And the unions are going to come into it and be like, "We just saw your earnings. They're great. I mean, you say that demand is high. Say that your margins are great. I mean, it's all roses, and but you're telling us times are tough, and so the OEMs, they're not going to really have a foot to be able to negotiate, because they're going to come in and say, oh, we're doing so bad, but their earnings say something completely different.